welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Last week, we kicked off the first of the ET Now budget-related Macros with Mythili discussions with an overview of what the budget is all about, what it can and cannot do, and ended with suggestions regarding the underlying ethos of Nirmala Sitharaman's maiden budget on the 5th of July. One of the key takeaways from that discussion was that fiscal discipline is paramount. And related to that was a broad conclusion that since the bulk of our expenditure is already committed, salaries, interest payments, pensions and so on, any attempt to be fiscally prudent while not skimping on essential expenditure on infrastructure, health, education, etc., must come by somehow increasing revenue. Which is why in this edition of Macros with Mythili, we have with us two of the best brains on the subject to tell us just how to do that. We're going to focus primarily on tax revenue, not only because both of our panelists are experts and they're ex-tax officials, but also because whatever one may garner by way of disinvestment proceeds, transfer from the Reserve Bank of India reserves and so on, these are essentially one-off items. We have to mobilize sufficient tax revenue since that is what accrues to the exchequer year after year. How do we do that? Let me turn to Najib Shah, former chairman CBIC, and Ashutosh Dikshit, partner Deloitte and former Joint Secretary, Ministry of Finance, handling tax policy and legislation for ideas, recommendations drawn from their years of experience from within the tax system. Welcome to the show, Najib, Ashutosh. I'm sure both of you will agree with me that increasing tax revenue is of paramount importance since, as I said, there's hardly any scope to reduce expenditure. And that means increased tax revenue, which brings me to my first question to both of you. Are we really mobilizing as much as we can by way of tax revenue? Given our level of income, development and also our need to spend on essential development expenditure, how does our tax to GDP ratio compare vis-a-vis countries at comparable levels of development? And let me start with you, Ashutosh. I know you're one of the few taxmen who believes we're doing enough. I don't quite share your views and I'm not sure Najib does either. But let me just hear you out first, Ashutosh.
So thank you, Mythili. Let me start off by saying that I also don't think that we're doing enough. But I wanted to go into the granularities of what our tax GDP ratio is rather than look at one general number which is around 16.5 or 17% of GDP. So I would concentrate on direct taxes, and indirect taxes, as you know, the two particular heads are corporate income tax and personal income tax. Now, corporate income tax for a number of years in India has ranged close to 3 to 3.5% of GDP, which actually is the same ratio which is there internationally and as is the global average among OECD countries. And given that we have had pretty poor corporate results over the last 4-5 years, I think that is a substantial achievement to maintain that corporate tax to GDP ratio. The real challenge which India has is on the personal income tax, because our collections have generally been below 2% of GDP, whereas in most countries where the tax GDP ratio is much higher, this comes closer to 8% of GDP. So therefore, there is a 6 percentage point difference. Now, if I look at the growth trends in the PIT, I see that there are some green shoots. There's been some good developments. So for a long time it was stuck at below or ranging close to 2% of GDP. But now personal income tax has touched 2.5% of GDP, and direct taxes to GDP ratio was close to 6% in 2017-18, which is the highest in the last decade.
Let me just interrupt you, Ashutosh, because we'll go into the various mechanisms of increasing. But right now, for the opening comment, I just wanted a broad comment on tax to GDP ratio. How does India compare? Are we doing well? Are we not doing well? And let me now turn to Najib, because I'm asking about the broad tax to GDP ratio, because every year we hear the FM reel out numbers and the numbers of Indians going abroad, number of Indians buying luxury cars, and the comparable number filing tax returns with commensurate level of income. So Najib, do you agree with Ashutosh that we're doing reasonably okay, especially in the terms of, very broadly speaking, the tax to GDP ratio? Najib?
I think we need to do more. There is no two ways about this at all. And the better we do it, the more efficient we do it, the better for all of us. Indirect taxes are lesser than 6, so we need to really work hard.
Oh yes, I would agree with you really, Najib, on that. But now let me shift specifically to taxes. Ashutosh, when GST was implemented, the hope really was that apart from cleaning up the entire tax system, it would result in a dramatic increase in direct tax collections, both personal as well as corporate income tax. And while there has undoubtedly been an increase, I believe the bump up has not been as much as we hoped for earlier. Is that a correct perception? And can we hope to improve on this in future? When can we hope to see a higher share of direct taxes relative to indirect taxes, as in all developed countries? Because that's how we should move it from the equity angle. Direct taxes are progressive, whereas indirect taxes are regressive. Ashutosh.
Let me come back to some of the points which I had mentioned earlier. So first of all, the GST was supposed to give 2 or 3 different impetuses to the economy. One, of course, is the taking away of the cascading effect which our earlier indirect tax regime had. The second is better compliance on indirect taxes and therefore higher collection of indirect taxes. And the third is that because those revenues are getting captured and reported, therefore a direct correlation or increase in the collection of direct taxes. Let me say that therefore, if I was to look at GST directly, I think it's early days because the way in which cash collections are happening under GST, I think it's difficult to say whether what is the tax GDP ratio emanating from the new GST regime as of now. But on direct taxes, if there is to be an impact, then one would see it in the PIT. Again, I would say that it's early days. There has been an increase in the personal income tax to GDP ratio historically, which was earlier ranging around 2% or a bit less than 2%, which has gone up to 2.5%. But I would not say that this is a direct result of implementation of GST, because there were other compliance measures of the income tax department. There was also the demonetization exercise, and of course there was introduction of GST. So I think we'll have to wait for another couple of years to see how much of the GST collection impact has directly on indirect taxes first, and then on direct taxes, especially on personal income tax. But I would expect if one has a successful GST implementation and compliance regime, then the personal income tax ratio should go up to 3 to 3.5% from the current 2 to 2.5%.
Okay, so Najib, Ashutosh is willing to give you credit, but not complete credit. But GST has been one of the biggest game changers on the indirect tax front. So first of all, congratulations to you for being one of the key persons to see it through. But it's now more than 2 years since we implemented GST. And though collections have looked up, we've got the 4th consecutive month in which monthly collections have crossed 1 lakh crore. Is that the best we can do? Has the potential been fully realized? What remains to be done apart from bringing the various sectors? What really remains to be done, Najib, to realize the full potential of GST?
Well, evasion has always been a matter of concern, even in the GST era. And the next GST Council meeting is closely looking at introduction of e-invoices for companies which have a threshold of more than 50 crores. So that would, apart from releasing them of the compliance burden, also increase verification of the invoices itself. This is something which is essential, where seamlessly we can match invoices and ensure evasion if any does not take place. So that is one thing which is likely to happen in this GST Council meeting. Secondly, the simplification of returns itself, which is also on the cards to happen in the next few months, should also increase the compliance and consequently bring more people under the net. There's going to be greater scrutiny and audit, because audit we had withheld really for the first 1.5 to 2 years. There's nothing really to audit, but now audit is going to start in a big way, and that again should improve compliance. So I think between e-invoices, the audit mechanism, we should try and improve compliance, and that should happen. I agree with Ashutosh when he says that these are early days for everybody here. But having said that, it has only been improving, like you rightly pointed out. 4 months in a row we have had better tax revenue, and I hope the next council meeting doesn't succumb to the temptation of reducing rates, because I don't think there is any necessity or justification for reduction of rates at this juncture at all. And there's a new government with a lot of tenure ahead of it. They need not have to succumb to any such pressure. So I think these are days where compliance will increase, and it should have a positive impact also on revenue.
Well, I hope so. I do hope the government does not succumb to the pressure of populist democracies. But Ashutosh, what is the target that Nirmala Sitharaman can realistically project in her forthcoming budget? The interim budget 1920 put the number at 13.80 lakh crore for corporate tax and personal income tax compared to just 12 lakh crore in the current fiscal. And that represented a 15% growth. The Revenue Secretary described this as realistic. Would you agree? Because we're talking about a slowdown in the economy. How important is it really to have a realistic target and achieve it? Or does it make sense to set a very high target, since it then incentivizes officials, so we think, to go about their job more diligently? Though, of course, there are instances of being over diligent at times. Ashutosh?
So I would emphasize, Mythili, that we need to set realistic targets, because not setting realistic targets has very negative consequences both for the tax administration's behavior as well as taxpayer behavior. If a tax administration is going to be judged by unrealistic targets, they then take unnecessary administrative actions which only lead to compliance burdens on the taxpayers and increased litigation. It also causes a feeling among taxpayers that they are being unnecessarily harassed. So therefore, I would say that realistic targets is very important. Unfortunately, Indian budget making has essentially been first deciding the expenditure and the fiscal deficit and then using the revenue as a plug-in. I think that should change in terms of overall budgeting. And coming to the current budget, for example, if you look at what are the actual collections which have happened over the March of the previous year, there is a definite need to reduce the budgetary targets which were there in the current budget by essentially 50-60,000 crore at least for direct taxes. And even after that, you would essentially still have a very positive buoyancy if those particular reduced targets are met.
Okay, so then we'll come to Najib and the indirect tax front, but after a break, because I'm afraid it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with two tax experts, ex-tax officials, and we're trying to figure out what are the kind of suggestions that we could possibly make to Nirmala Sitharaman as she goes about the task of her maiden budget, with always an eye on revenue, because in a country like India, there's just no way you can cut back on expenditure. Ultimately, it has to be a question of increasing revenue, which means tax revenue. Najib, I'm sure you agree with Ashutosh on many fronts, but would you agree that on the indirect tax front also we need to be a little more realistic, and particularly since the new union government now has much less of a role to play post-GST, since it is the GST Council that virtually decides everything, leaving the union government with only customs and various cesses, especially once the sectors that are presently outside the GST are brought under its armpit. And this makes tax estimation particularly problematic. In fact, GST collections by the centre miss the budgeted target set for the current fiscal by 1 lakh crore, I believe. And despite the total mop-up from indirect taxes has been pegged at 7.61 lakh crore for 1920. At the same time, the PM has promised to get 99% of the items to the 18% or below slab. So how are we going to do that? Have lower rates and higher revenue taxes? How does one square the circle, Najib?
It is going to be an extremely difficult task, because as I mentioned earlier, the government should not succumb to reduction of rates as a means of spurring demand, which has been the demand of some segments of the industry. I think the rates are very, very reasonable, and we should now look at compliance. And yes, on the indirect tax front, the union budget no longer has a mystique, because the GST Council it is which virtually looks at all aspects of rates, laws, procedures, and the leg room available is only with customs, where the revenues have been reducing because we have been reducing rates and also been entering into free trade agreements. So between the two, the customs revenue really has a very little role to play. I'd like to flag one point which the interim budget papers again brought out, is the huge amount of arrears between the direct and indirect taxes. There are roughly around 10 lakh arrears 10 lakh crore of arrears. Now that is something which we should really be looking at very, very closely as to how we can mop up as much as we can of these arrears, because I think that's an area of neglect for both the direct and indirect tax side, and that is something which we need to look at closely as a means of augmenting revenue.
Najib, one of the reasons why we have so much of arrears really is because the endless litigation between the tax department and taxpayers. So Ashutosh, in fact, we've been hearing about a direct tax code for a long time, and maybe if we had a direct tax code, a simple direct tax code, much of the litigation that we're presently seeing would vanish. So why hasn't this happened? On the personal tax front in particular, given that this is the budget and people would be interested, our viewers would be interested, is there scope to lower tax rates, or can we at best hope for some kind of rationalization of slabs? Do you see government delivering on its old promise to lower the corporate tax rate to 25%? How can we go on lowering tax rates and then expect government to have enough revenue to meet the endless demands on its purse? Ashutosh?
Mythili, I do not expect any major changes in the tax rates. The personal income tax rates and certain rebates were already reduced in the interim budget, and as you pointed out, the revenue pressures on the government do not allow for much of a leeway. If there was an ask which one would have from the finance minister, at least on direct taxes in this budget, it would be the rationalization of the taxation of dividends. India is one of the outliers because it taxes dividends in the hands of corporates, which is a dividend distribution tax at a pretty high rate of 20%. This should be rationalized, and we should revert to the earlier method of taxing dividends in the hands of the recipient. I don't think that will have any major impact on the tax collections, but it would definitely help in rationalizing our taxation regime.
And Ashutosh, when are we going to see a simpler direct tax law? If you look at the Income Tax Act, it's enough to defeat anybody. Ashutosh?
So again, Mythili, let me disagree with you here. Income tax is a complex provisions. They are complex acts. They are complex across the world. I do not think that the introduction of a direct taxes code under a new law is essentially going to be a panacea to solve all the complexities in the law. I think one of the major drivers of complexity today is the unrealistic targets which are set, and because of which it impacts both taxpayer behavior as well as the behavior of the tax administration. Having said that, there is an opportunity in the introduction of the direct taxes code to simplify certain provisions, which could, I think, even otherwise also be simplified through the different finance acts. But when you do it through a direct taxes code, then you have a holistic look at it, and you could simplify personal income tax provisions as well as certain corporate tax provisions. For example, the taxation of dividends, like I just pointed out.
Okay, Ashutosh, I'm not sure I quite agree with you, because I really look forward to the day when I could file my returns without taking the help of a chartered accountant. But Najib, earlier we spoke about the declining importance of the union government in GST, but the fact remains that customs duty is still something that remains with the union. Is the scope limited given the trend to lower tariffs, trade disruptions, and also the rising number of preferential and free trade agreements that you mentioned earlier? I know you have very strong views on trade agreements like RCEP and other FTAs. So what are your reservations? Could you explain for the benefit of our viewers?
What every free trade agreement seeks to do is to extend preferential rates of duty for those imports which come from the free trade partners. So in effect, in case the rate otherwise is 10%, for imports coming in from the free trade agreement country, it is nil or 1. This is subject, of course, to the rules of origin, which means that these goods ought to be manufactured in the country from where the export is taking place and who's our free trade agreement partner. Unfortunately, we have been having a lot of problems with the rules of origin certification itself. They are issued pretty carelessly, if I may use that word, and benefits are given. In the last budget, the duty forgone as a result of the free trade agreements was shown as to the extent of rupees 23,000 crores. That's the amount of revenue we lost because of free trade agreements. And now RCEP attempts to bring in a new partner, which is China. So I think that is completely should not be should not be happening. But the government is going ahead with RCEP as things stand. And remember, RCEP is with the countries with whom we already have free trade agreements. That is the ASEAN bloc, Japan with whom we have a free trade agreement, South Korea with whom we have a free trade agreement, Australia and New Zealand with whom we have detailed talks have already been held for individual free trade agreements. And in the ambit now, we bring in China. So it is an agreement which has ASEAN, all countries with whom we already have free trade agreements, and countries with whom we are negotiating for free trade agreements, and China with whom, without even a free trade agreement, is able to swamp the Indian markets. So I think that will impact customs revenue badly, and more importantly, have a severe impact on Make in India. Why would I be manufacturing in India? I would much rather be a trader and bring in goods, because remember, the free trade agreements cover the entire gamut from raw materials to intermediates to the finished products. So it impacts manufacturing, it impacts employment, and we need to proceed very, very cautiously on free trade agreements.
Oh yes, indeed. I do hope the government is listening very carefully to your advice, Najib. But Ashutosh, you talked about dividend distribution tax, and the fact is that differential taxation of income, depending on the source, whether it's from capital or labor, has long been a part of modern capitalist economies. Is it time we reprioritize and started incentivizing labor rather than capital, given the need to increase employment? Piketty's book, in fact, Capitalism in the 21st Century, clearly attributes rising inequality to the lack of a level playing field in the way we tax capital and labor. Do you think it's time we rethought this, Ashutosh?
Yes, Mythili. I mean, irrespective of the current developments where much more revenue is being, or much more profit is getting attributed to capital, the construct should always be that the taxation of capital and labor should be on the same footing. To that extent, the exemption of capital gains from taxation on the equity markets was retrograde, to, even though we did collect STT, and therefore the introduction of capital gains tax on those particular incomes, which has happened a couple of the budget previous to this one, that is a welcome move. I think we need to move forward on that, so that essentially we start taxing capital more and on the same footing as we do income from labor.
Well, I'm really glad, Ashutosh, you agree with me on that, because it's something I feel very strongly about. Because even though dividend distribution tax might smack of double taxation, who are the people who earn dividend? Not the poor in the country, the well-heeled. So I think it's fine. Let them pay a little bit more. So that's my view, but it sounds very left of center. But I'm not sure whether Najib would agree with me. Because Najib, I want to now move on to the next issue of how do we improve compliance? I think both of you spoke about compliance. Is it that we as a society are notoriously not willing to comply? We're always looking for loopholes, not willing to pay tax. And what could the role of IT and of tax administration be in this? Do we use carrot, stick? How much carrot, how much stick? Najib?
I think we need to have a lot more technology in place than what we do have. And more importantly, the technology needs to work all the time, so that there's no excuse left for the taxpayer to comply with the requirements of law. We need to have far more data analytics than what we're having right now. We need to have greater coordination between the CBDT and the CBIC, so that there's a free flow of information, and where a person to attempt to evade taxes in one sphere, he comes into the net of the other department. There needs to be a greater flow of information also between all other organizations within the country, and technology should permit that. So this is the technology part. The second part is administration itself. The tax administration needs to gear up. There has to be a lot more scrutiny of documents with the aid of technology. It should be possible. Audit should be done more selectively with the aid of data analytics. That should be possible. More focused audit. And thirdly, of course, where we do get evaders, they should be punished. They should be punished severely. We need to ensure that the entire process followed in the judiciary is fast, so that cases don't hang on indefinitely, but punishment is swift and acts as a signal for every other person who wishes to evade tax.
Oh yes, I'm a bit of a tax fundamentalist on this, and I'm sure Ashutosh, as a former tax official, you would also agree that we really need to be harsh on those who don't pay their taxes. But the problem is that the tax departments, both indirect and direct, as we've seen from recent reports, are notorious for the kind of corruption that also happens over here. How do we kind of tell people that please pay your taxes, at the same time ensure that that tax department doesn't have the stigma, which there definitely exists today, of corruption in these departments? Ashutosh.
So I believe, Mythili, that technology is the answer, because more and more technology would help in interaction with the tax department directly without the intermediacy of tax officials. I think both departments are moving towards that. On the direct taxes front, you now have all return filings which are online. Now assessment procedures are also being gradually moved to an interface where you would only go to your website and upload documents. There are certain glitches there, but I believe that that is a movement in the right direction. The other thing is what my colleague just pointed out, is that there needs to be much more of a interface and interaction between the direct taxes and indirect taxes, especially now that because we have a GST regime. So first, starting off from sharing of information between the two, our ultimate goal should be to be operating from a common database, because once you're doing that, then essentially the source of truth remains the same, and it is much easier to capture all transactions, both for indirect as well as direct tax purposes.
Oh yes, certainly. So a number of suggestions coming in for Nirmala Sitharaman, because I'm clearly of the view that we need to pay our taxes. Every Indian must know that if he or she evades, there's going to be something to answer to. Along with that, it's only after you pay your taxes, then hold your government to scrutiny. But one cannot question government unless one pays one's taxes. And the answer to all this is really, as both Ashutosh as well as Nadeep pointed out, is technology, technology and more technology. Thank you so much, Ashutosh and Nadeep, for joining me in the discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.